Hi, I'm Jackie.
And I'm Candace.
Welcome to WTF, Women Talk Finance.
Our WTF podcast will take a simplified approach to finance, and we talk about investing, a topic we believe women don't talk enough about.
We'll discuss common financial questions and challenges that women face in business and throughout their personal lives. A quick disclaimer before we start. The opinions that we're going to discuss are just that. They're just our opinions. We are not here to give investment advice. We will be talking about who we are, what we're about, and what information we'll be bringing to you.
We'll be speaking to women from all walks of life whose experience will help us frame some of the issues and challenges that women face today in business. Maybe you're starting your own company and investing in your future.
We're going to talk about knowing your worth in the workplace, how to ask for that raise, and we'll also talk about investing, something we believe that women don't talk about enough. You'll find this is a common theme throughout our podcast to come. How to invest, different kinds of investments, and how to pay yourself first. We're going to give you actionable information that will allow you to understand how to make your future better starting today. Welcome back to WTF, Women Talk Finance. I'm Jackie.
And I'm Candace.
And we are here today with Amy Brazil and Michelle Hulbert of Caliber Home Loans. Thank you for being here with us today. Hi.
Thank you.
We're going to talk about home buying in 2022. And just to be really clear, it is April 4th as we record this. We're hoping that this information stays relevant and true until we're airing this show live at the end of April. But a disclosure that these are our opinions and we're going with information that is true as of today's date. So with that said, let's launch right in. What do we need to know about buying a home in 2022?
Oh my goodness.
It's a nice wide question.
A tiny little question for you.
Open floor. Start where you'd like.
So I guess I would start by saying being prepared is the number one item is just be ready. Don't go out and start looking at homes if you haven't spoken to a lender, because there's really a lot to do ahead of time.
I was just going to ask, what does it mean to be ready? What does that look like?
Well, you don't want to be out there looking for a home and have your realtor start to write an offer and then find out, oh gosh, I can't afford for that. I don't even know what I'm supposed to be doing here. So we like to see people weeks, if not months, before they're actually starting their home buying journey, because there might be things on their credit report that they're not aware of that we can help them fix. They might need to save a little bit more money. They might need to get a gift. I mean, there's all kinds, get a raise. There's all kinds of variables that weigh into that. And so knowing that they can get those questions answered with plenty of time to fix any problems before they're out there looking at a house. Because you know how it is. You see a house, you love it, that's the one you want, and then you're not ready.
And so you're not even talking about getting pre-approved. That might be part of this process, but you're talking about even before that, start looking at, with others at what your credit report even says about your financial ability to go out and buy a home.
What we find is that so many times buyers will come in and, they're not aware of what their credit score is, or they think based on Credit Karma that it's X and it's really not that high. And unfortunately with credit scores, it's indicative of what your interest rate will be.
Sure.
And also, if you don't put 20% down, what your private mortgage insurance cost will be. And so there can be a huge difference between, let's say, somebody that has a 680 credit score and someone who has a 740 credit score. So the earlier you start with that, the better, because in many cases, it's an easy fix. It could be pay down that credit card, or maybe you can get an increase in your credit limit. I mean, these are things that can be achieved, but not necessarily in 5 minutes. So the sooner the better.
I think people have this idea that their first stop is to get a realtor, to get somebody to help them start finding the right home for them, and that is not the first step. Their first step is to call you.
Right, and any qualified realtor, particularly in a competitive market like we're seeing across the United States, is going to tell their borrower, go get pre-approved. They're not going to take them out to see homes and set them up for failure or make their offer not as competitive, because coming in pre-approved, solid pre-approval, which means we've run their credit, we've verified their assets, we've looked at their employment, that's going to make their offer that much more competitive. So that first step will be told to them by their realtor anyway. So why not start with the lender to begin with?
Absolutely. And it's almost like your first is almost like a counseling session. You're like, where are we at? Let's see are we healthy enough to buy a home?
Yeah, exactly.
And to do it well, because you're right. I mean, that little bit in the credit could save them so much in the future, right? I mean, long term.
Well, it can, and when you start, you see home prices in our area and across the country are definitely on the rise. That benefit and credit score can be the difference between, maybe $100 or $150 a month in a monthly payment. So we're big advocates of the sooner the better. Let's help you sooner instead of getting you, into a house when you're not quite ready.
And we'll meet with people a year before they're ready. It's like, what are you hoping? What are your goals? What do you want to accomplish? Let's check your credit if it's going to take that long. And we'll put them on this path, and then we work with them. We stay in touch with them until they're actually ready to go. So it's never too early to reach out if you're really thinking that's something you want to do in the future. And any lender is going to be open to that. They're going to want to meet with you and help guide somebody.
I think we've got so many tools now. Long time ago, I think that would have been the natural step. Right now, we have this world of online and these tools, and it's like, calculate your mortgage for this dream home. And that sets it can set a really false expectation
really
for people, right? They've set their mind on this dream home. They've done the quick calculator that takes none of these factors in.
Right.
And they've now decided, oh, well, perfect. I can afford this if I really save. And they don't recognize that, no, there's actually you've got to have an appropriate financial situation to afford that. No lender's going to approve you to spend all that income that you're barely making the mortgage.
Right. And the key question is, do you want to spend all that income? We have that conversation all the time with our borrowers about, you can afford a $600,000 house, but do you want to afford a $600,000 house?
And I think to that point, both of you are home loan consultants. There's much more to this than just the numbers. The numbers are a huge piece of it, right? Talking about interest rates rising and home prices rising. But as you're working with people, if this is a year long that you're helping them get things in order, there's a relationship that's being built, right? And home buyers have different choices for lenders, and lenders can, be selective with their clients. So there's a lot that goes into this relationship building and making sure you're finding a good fit. And it sounds like there's a lot of value add that you guys provide.
Well, it's not always about the rate. We have this conversation all the time. There's a lot about, making sure that you're working with someone who has your best interests at heart. I mean, we're in this for the long haul. We're not here for a quick buck. We want to make sure that our clients are happy and want to stay with us long term. So we're going to do right by you in the very, very beginning, right? So that's a key component of that too.
I think one thing that buyers really have to consider in this market is, how competitive it is. And when you take that into real time, it's split-second decision making. And that's why it's important to work with somebody you've established a relationship with. Because if you need something on a Saturday afternoon at 4 o'clock, then somebody on our team is going to get back to that person and get them what they need. Whereas, you get clients that they want to go to the online lenders, which, that can be great sometimes, but not always, not in a competitive market. You're not going to get the service level that you need to get your pre-approval letter updated or to answer that question in at a moment's notice. And I think that's where we really have a value added.
Yeah. That's a great point, because so many things are moving so quick right now.
Oh,
and I think as a buyer, you are making an emotional decision and you're often put on the spot with very little time to process and analyze. So having your lender, having a good relationship with your lender, having built that trust, they know your situation, they know kind of where your boundaries are, they might almost be somewhat of a good sounding board.
Yeah.
They're experts.
Exactly.
They're able to help you and guide you towards a sounder decision, kind of help you take that emotional piece. At the end of the day, it's still your decision.
Right.
But it's somebody who's got that experience, that professionalism. I mean, you guys have been in this industry for so long. You've seen through the different cycles. And to bring that kind of guidance to buyers during this market that is unbelievable. That to have you as a resource is huge.
With interest rates rising, and with home prices still rising, and seeing how quick things are moving, what would you guys say about the market right now? Is it time to buy, or would you suggest people hold back and wait a little bit?
I don't think people should wait.
I don't think people should wait.
Buying a home serves a need, and there's not a ton of inventory on the market, not here, not anywhere. But if it fits your comfort level for a payment, it's almost always better to purchase that home and start getting the benefits of building your own equity and getting a tax deduction and being able to put wallpaper in your dining room if you want to, as opposed to paying someone else's mortgage. Because rents across the country are almost as high or even higher in some cases than what a mortgage payment is. Now granted, with prices rising and interest rates rising a little bit, it does, it does affect someone's payment, and maybe it requires a little bit more down. But at the end of the day, it is almost always a better bet because we're not seeing any type of housing bubble in the future.
Right, and rates are expected to continue to rise. And if you're jumping in now, you're taking advantage of the continued appreciation that we're expected to see. And while it is slowing down, it's not expected to be 20-25% jumps in appreciation like we've seen over the last 2 years, but it's still expected to be 8, 9, or 10%. That's significant gains in somebody's appreciation and equity in their home. I mean, real estate is the quickest way to build personal wealth across the board. So jump in now. And like Michelle said, if you're comfortable with the payment, it satisfies so many other things, and not just building equity and building wealth, but having your own place to live in, knowing that your rent's not going to go up the very next month. You can have a dog. I mean, there's so many other personal satisfying things that happen when you purchase a home as well.
Interested in investing in cryptocurrency? It's a simple way to diversify your portfolio. But what about the impact that cryptocurrency mining has on the environment? We have a solution. It's called Cryptowell. Cryptowell uses eco-friendly technological infrastructure to generate power for cryptocurrency mining. Accredited investors go to rowcapitalgroup.com to power your portfolio with sustainable crypto mining. Every day you hear about people making money by investing in IPOs and startups. But what about you? These kinds of investments are simply not available to Main Street investors. At Row Capital Group, we are committed to providing access to strategic, early-stage, primarily low-market correlated investment opportunities. Accredited investors go to rowcapitalgroup.com for more information. Row Capital Group, empowering your financial journey.
And this is Women Talking Finance. So a lot of our podcast shows are geared toward women and how different situations and even something like buying a home can be very different experience for a woman versus a man buying a home. And I think we have learned that during the pandemic, a lot of women changed their spending habits and their investing habits. So with that framework, can we talk a little bit about down payment options? How to approach this if you are a woman on your own, maybe not, but if you're buying a home for the first time, whether you're on your own or not, women buying homes. Let's see if we can narrow our scope in that regard a little bit.
Yeah.
Well, one of the first misconceptions is that you have to have 20% down to purchase a home, and you do not. You can have as little as 3% down, 3.5% in some cases.
Right. I didn't. Did you?
Yeah. I didn't know. I did not know that.
So I think that's I think a lot of people think
I'm really glad you learned something new. Thank you.
Really?
Somebody else is sitting there saying that too.
So I think that people think, oh my gosh, I'm never going to be able to save 20%, and you don't have to have 20%. Secondly, there are many first-time homebuyer programs out there, if you are truly a first-time homebuyer, across the United States that allow down payment assistance programs. Those have credit score requirements, income requirements, but those are easy to find. If you qualify, that's an option for someone to have as well. So I think we got to get that conception out of the way that I can't have, oh my God, I can't save 20%. I can't even jump in or even think about it when you really can.
Just with the baseline home prices here, you would have to have $100,000 if that's the rule you were trying to follow
to 20%.
in your head. Right. And that keeps so many people, out if they haven't spoken to you first and can find out what their options are, right?
And we talk about this all the time. We do a lot of social media as well. And one of the things that always is coming up is people think they have to have all this extra money to put down. And, it makes a really big difference when you let them know you don't.
I learned today that you don't.
Well, and I think too, if you look at, somebody would talk about, let's talk about the cost of waiting. So for example, somebody that has maybe 5% down, but they're trying to save for 20% down. Well, like you said, that could be $100,000. That might take another 2 to 4 years.
And where's the market going to be at that point?
Exactly. But then, you may look at the cost of, let's say, that 5 or 10% down. You're going to pay PMI, private mortgage insurance. And basically, that is the cost associated with not putting 20% down. And that's where your credit score comes in. Mm-hmm. Somebody with a higher credit score, sometimes they look at that PMI fee when I show it to them and they're like, that what? That's it? I mean, it's a risk-based premium in most cases, and it goes in accordance with your credit score. So a lot of our clients are actually shocked that it's as low as it is. Mm-hmm. So that kind of dispels the myth of, I should be waiting for that 20% down.
Mm-hmm. And if you're weighing those options and you're like, oh, that's making a difference for me, well, what big of a difference is it relative to the years in rent that you would actually be paying versus that little bit in PMI? Mm-hmm. So that is something to, consider. I mean, it's just a huge value. You guys really changed the scope of what people can search for when they're beginning that home buying journey.
Well, and PMI, again, people are fearful of that, but it has allowed so many people to buy a home that never, ever could possibly qualify. And it's worth it, in our opinion.
Yeah. Cost is this versus spending years maybe trying to get to the 20%.
And sometimes we'll even have a conversation of if someone has, say, 15% down versus 20, it's like, maybe you don't want to put the 20. The PMI is so affordable at 15% down, and you save that extra 5. Maybe you got to do some landscaping. Maybe you have some furniture you want to buy. Maybe you just want that home maintenance cushion, right, in your finances.
Let's say they do that, and in a couple years, it makes sense that their mortgage has been paid down enough and their home is appreciated enough that refinancing would make sense, and it gets rid of that PMI. Is that an option and something maybe people should even be considering when they're looking a couple years down the road?
It is an option. If it's a conventional loan, there are ways to remove PMI without having to refinance.
Okay.
So that's first and foremost what we would look at is your interest rate good? If it's good, maybe we petition the lender. Under certain circumstances, the agencies have guidelines that say if you meet this criteria, that PMI can be removed.
That's great.
So you could actually lower your payment without having to spend the money to refinance.
I didn't even know that.
I learned that today as well.
Learned something today. I knew about the VAIR.
Earl.
And I learned about that. I was fortunate enough to get it, a VA, which was great for us several years ago. But I didn't know that was an option on a conventional as well, that you can keep. I mean, because I think you just have to refinance.
Right.
So that was the first time I had heard you. Okay, it's not a full refinance. That's actually just a rate reduction loan. Right. And this you can petition to actually just remove the PMI. Right. That's brilliant.
Under certain
conditions. Yeah.
And keep in mind that FHA still has the requirement that in order to remove PMI, you have to refinance.
Okay.
But for conventional loans, it's an entirely different set of guidelines.
So we would ask about that. I mean, we would look at that as, is that the best option for the client? Now, if their rate's higher and refinancing and dropping PMI makes the most sense, then that's what we would recommend.
Do you counsel on the right time to refinance? Do you have guidelines that when you're talking with people, say they've been in the home for 6 months, but interest rates are moving around? Or, I mean, is it really case by case, super specific? Or based on your experience, you're like, yeah, we know, right? And we can counsel people on when the right time to go ahead and do that is.
Well, there always needs to be a benefit, right? I mean, it's the rate low enough to make it pencil out. I mean, and that's always how we look at it. What's your situation? Are you pulling money out because you have some expenses coming up? Maybe it's not a rate reduction, but you're pulling cash out, which is a more affordable way than taking money out of my investments, or I don't have that money. So I think it is definitely a case-by-case business. Now, when rates, plummeted back in the good
Everyone,
old days.
yeah.
You bet we were
A month ago,
refinancing.
2 months ago.
3 months ago. Well, we were definitely refinancing many people. And in some cases, I think we did have someone 6 to 9 months. That's pretty unusual that you would have that much of appreciation or that much of a benefit in the rate for that to have happened. That person just kind of hit it right at the right time. But
well, and I think this last couple of years was a bit of an anomaly.
Yeah.
So, you had just off the charts appreciation, you had record low interest rates. Some of our clients actually refinanced more than once.
in that 2-year period.
Wow.
Crazy.
But, refinancing covers the gamut for people. It's rate and term, meaning you're basically doing it to save money on a monthly basis. Cash out could be whatever they want to use the cash out for. And then sometimes it's a buyout. It could be a buyout of a spouse, a partner, divorce, whatever the case may be. So those are all valid reasons for refinancing, and it's been very robust over the last couple of years.
So we have listeners who are right now probably paying rent and probably feeling boxed out of this type of market, right? But at what point should they really consider looking at what they're paying a month, and maybe it's 20, 25, I don't know how much % of their income towards rent, and when should they really consider, I need to go speak to a lender about if the home buying is an option for me right now, or what I need to do to go forward?
Yeah, so the rule of thumb, now keep in mind, what a lender says you can qualify for and a client is comfortable with might be opposite ends of the spectrum, because everybody has a different budget and they spend their money differently. But 25 to 33% of your gross income is typically what the agencies say that you can spend towards your housing expense. We have
housing expense being a rental or like a mortgage
or
payment.
a mortgage.
But okay.
Which includes principal, interest, property taxes, homeowners insurance, and private mortgage insurance, and homeowners association. So anything over than that is, their monthly consumer debt, let's say. If you have somebody that carries very low consumer debt, then they may feel comfortable putting a little bit more of their gross income towards the housing expense. So I think the upfront conversation with our clients is, you got to tell us what you're comfortable paying on a monthly basis. And then, we try to back into it that way because, again, everybody's situation is entirely different.
And the other thing to keep in mind too is that everyone is different. I might be 25 years old and I've got $10,000 in the bank and I've got a good steady job, and you should be jumping into home ownership right now if you can, if you're comfortable with it, with that responsibility and obviously that you can qualify. Or I might decide I need to wait till I'm in my mid-30s and I want to have a bigger down payment, or I want to wait till I'm married. I think everyone's position in life is different, but as I mentioned earlier, it's the quickest way to create wealth. So the quicker you get into it, the quicker you're going to be able to recognize those gains. So we're big proponents of jumping.
The big takeaway for me here is that no matter where you're at, again, we circle back to the value add of having the conversation and the value add of the relationship. If you're not sure if it's right for you, but you want to start asking questions, go talk with a potential lender and just start the conversation. Again, it's a lot more than just plugging in the numbers into those calculators online, because there's far more considerations to think of. And there's just huge value in starting the conversation and learning what you can.
I think those are nice tools, and I think we've all become, at least me, I'm a bedtime scroller of all the available homes for sale, and we're all remodel experts thanks to HGTV, but there's nothing that can replace the expertise that you guys bring to somebody's home buying experience. And I agree. I bought my first home at 21. I had very little money down. I was able to do the first time home buyer's credit, FHA. I was able to do that. It was tough, but what it did was it set me up to buy my next home, because I was able to sell that home at such a great time. I made a good amount of money on it that I was able to have a really nice down payment for my next home. I think people feel like they have to buy their forever home
right off the bat.
And this I knew was a couple years. So, I think that's really good to have that conversation. I grew up in an environment that home buying seemed like a good process, and I had a lot of mentorship there. So if people don't have mentorship, that's great advice. Any last nuggets, any last little pieces that our listeners should be taking away from this conversation today? It's a huge topic and it feels like a lot to bite off. So any little pieces of advice you can give?
Oh goodness, there's so many
Pay your
pieces.
bills on time.
You just keep throwing these very easy questions at you.
I'm gonna Google first-time homebuyer credit. What is? Please tell us about that.
I want to make one little point too. Is that I think it was MGIC did a big study about home ownership and first-time buyers and millennials, and women are a huge part of that, more so than men. So kudos to you for doing a program that, empowers women and having them jump into that. So you were alluding to the fact that you can get online and do a lot. And millennials have so many tools at their disposal that it's too much information.
Yeah.
And
I agree.
MGIC did this study and discovered that most millennials will do all that research, educate themselves, but they always go back to a trusted source, whether that's a parent or someone that they know who then usually refers them to a lender or a realtor who then really helps them discern what is the accurate information that you've seen online. Because you're right, you can click in and put in all of these different numbers and say, oh, I can afford an $800,000 house, not taking into account all kinds of other factors. And they walk away, they're so smart, millennials, because they recognize that there's a lot of bad information out there too. So going to a trusted advisor, whether that's someone you know, or you Google them, you check out their reviews, you talk to your parents, which are a great resource, and making sure you're talking to someone who is really gonna just lay it out. Here it is, black and white, this is what you should do, and here's your best options, is the first step, always.
And I think I'm gonna give you guys a plug right now, because if you're in Northern Nevada, call Caliber Home Loans, because I would really encourage you, if you're going through this process, you want somebody who has seen the seasons of real estate, who has been, they just got licensed and they're like, oh, first day on the job. And I say that as somebody who was licensed and first day on the job. Dude, you don't want me doing your mortgage. Go to people who have been doing this, that this is not just like they saw the hot market and they're like, I'm jumping in. People who have made this a lifelong career and passion, because that's what you guys have, is you guys have a passion in this. You have built this wonderful business in helping people, and so that's what you want.
Well, if I can put a little plug in, so we're the Hulbert Brazil Team, and Michelle, of course, has 30 years of mortgage experience, and then I was a realtor for 20 years. So we bring a really interesting perspective together for our clients, and you're right, we are passionate about this, and we would help anybody. If you're in Kentucky, call us. We'll give you our opinions, right? We're very free with our opinions.
You're getting licensed in Kentucky tomorrow.
But we would be able to help them find somebody in Kentucky. Yes. But I don't want someone to feel like listens to this podcast that they couldn't call and ask us a question, because we're all about home ownership and especially women in homes.
Yes, love it.
We have the best job in the world. We really do. Obviously there's days when it's entirely challenging, but at the end of the day, we get to help people build wealth, fulfill their dreams, provide housing for their family, and it's amazing. It really is.
It's part of, our requirements as humans is shelter. And you guys are actually working with people to create their own. That's an incredible thing, right? You guys are giving people that level of security and holding their hand through this. Because most people won't do this too many times in their life. And it can be kind of a stressful and painful process. And so this expertise and experience that you're giving to people is huge. So find somebody you trust and sit down with your lender first. Please do not find your dream home on Zillow because you pre-qualified yourself on some calculator on Google.
Without taxes and insurance.
Without anything else, and it's 75% of your income. Sit down with you. That's not what you do. I know. Please sit down with a lender, and it's a great time to find a lender. Whatever phase you're at in life, sit down with somebody and find out where you're at, because you might be further along than you think, or you might have more to work on, but it's a great opportunity to find out where you're at and get started.
It's still a good time to be buying.
Absolutely. Great.
Thank you guys for coming and sharing
Thank
this
you.
with us. It is invaluable stuff, and thank you for what you're doing. It's a really cool feeling when you go buy a home.
Yeah.
Big deal.
Yeah, it is.
Yeah. Thank you.
Thanks so much. Thank you for tuning in. I hope you got something valuable out of this. I did tons.
I got 2
Yes,
new things.
nuggets.
I learned 2 new
Nuggets.
things.
Let us know what your nuggets were from this conversation. Like and subscribe and comment. Let us know what you think. Thanks so much.
Thanks for listening to Women Talk Finance.